The best way to build up your savings account is to make sure you are in control of your income. Know where your funds are going and live within your means as much as possible. This means getting in the habit of putting your hard-earned money toward the things you need first and avoiding anything you can't afford. Now, ideally, we'd all be able to go through the rest of our lives without ever borrowing money. But for a lot of people, this isn't always realistic. As you get older, you may decide to make bigger purchases, like for a car or house. Many find that in order to do this, they need to borrow money. Home loans, auto loans, credit cards, and personal loans are some examples of the services offered by credit unions and banks. And loans like these can help to fund the larger purchases in life. But as amazing as it would be to get free money so you can buy whatever you want, that isn't how a loan works. Remember that loans must be paid back. For this reason, it's important that anyone who is thinking about getting a loan considers how necessary the loan is, how big or small of a loan they actually need, and make sure they have enough income to pay the money back over time. You should also be aware that any loan you take out will appear on a sort of report card that will follow you from the time you turn 18. This is known as a credit report, and it keeps track of a person's loans, both past and present. That includes auto loans, home loans, credit cards, and more. All of this will appear on your credit report, along with how much money you've borrowed and how well you've done at making on-time loan payments. You may have heard the word credit used before in a few different ways, like someone asking their friend whether they have good credit, a commercial promising auto loans even for those with bad credit, or a financial institution saying they check credit for all their loan applicants. In these contexts, the term credit usually refers to your credit report, along with something else called a credit score. A credit score uses the information in your credit report to generate a 3-digit number, typically ranging on a scale of 300 to 850. If you ever decide to get a loan, the financial institution you apply with will usually check or pull your credit, meaning your report and score. Generally, the higher your score, the more likely the financial institution is to lend to you. This is because a higher credit score can signal that you're more likely to pay the lender back based on how well you've done with loans in the past. But it isn't just lenders that look at your report and score. Landlords can pull your credit after you've applied for housing, and sometimes even employers can check credit when considering you for certain job positions. For these reasons, keeping your credit in good standing is important. And even though you might not have to worry about this quite yet, know that there are some things you'll be able to do to keep your credit healthy. Here are 3 key ones. Only borrow what you need to, use credit cards wisely, and make payments on time. First, only borrow when you need to. Don't make a habit of applying for a loan whenever you see something shiny and expensive. And resist the temptation to open a hoard of credit cards you don't need. We're not just talking about credit cards from banks and credit unions. A lot of other businesses offer credit cards too, like airlines, clothing stores, and online merchants. Businesses can sometimes offer these to you without it being clearly explained that they are in fact credit cards, which will affect your credit score and report. If you are ever encouraged to sign up for a card or rewards program with the promise that you'll get a discount on your merchandise or earn points toward your next purchase, find out whether you are really being offered a credit card and don't sign any paperwork or provide any personal information without knowing exactly what you're signing up for. Second, use credit cards wisely. If you open a credit card, don't use it more than you have to. Remember when we talked about how using a debit card can make it easy to spend more than you'd originally planned? Well, the same goes for credit cards. The difference is that while a debit card uses funds you already have available in your checking account, a credit card allows you to quickly borrow money you'll have to pay back later. Although credit cards can be useful tools and are used by millions of people every day, it can be easy to end up in a financial pickle by spending more money with a credit card than you can actually afford. Avoid spending more than 30% of your credit card limit at any given time. So, if you have a card that lets you spend up to $1,000, try to spend no more than 30%, or $300, before paying down some of the money you owe. And whenever possible, do your best to pay back everything you spend on the card within a month. Finally, make payments on time. Whether it's an auto loan, mortgage, credit card, or a personal loan, you will be expected to pay back the money you owe bit by bit. These payments are commonly due by a certain date once per month. So if you have a car loan with $500 due monthly on the 25th, make sure you complete the payment on or before the 25th of every month. This will save you from getting charged late fees. Plus, your payment punctuality will affect your credit score more than anything else. So it's a good idea to set up automatic payments to minimize your chances of forgetting a payment. And remember to check your account history at least twice per month to make sure all of your automatic payments are going through correctly. In the end, credit is another piece of your personal relationship with money. You get to decide what this relationship looks like, and it doesn't have to be the same as anyone else's. Just keep in mind that it will go a lot smoother if you make a point to keep your bank account and credit healthy by creating an effective budget, regularly checking up on your account history, and knowing the financial tools offered through your credit union or bank, including checking accounts and the different types of helpful savings accounts available to you. So, what are you waiting for? There's no better time to start the next part of your financial journey than now. And don't forget to revisit our financial literacy videos whenever you like. Best of luck!